Hi, I'm at St. Jean Farm Days. I'm here with Darren Bond with Manitoba Agriculture. He just gave a crop profitability outlook for 2026. Darren, one of the first words I heard you say during your presentation was the word sobering, because some of the numbers were quite alarming to some people maybe. That was due mostly to inflation, of course.
Yes.
How is farm inflation a little bit different than general inflation we're seeing across Canada?
Well, I don't think we've really sat down to figure out what farm level inflation has been over, say, the last 5 years. We look at the Bank of Canada data or Statistics Canada Consumer Price Index, they're all around 20% over that 5-year period. But when we look at the farm level inflation, it's a lot more than that. So let's take, for example, equipment. Mm-hmm. Our department comes out with a custom rental rate equipment machinery guide. It estimates rental rates, custom rates. A lot of farm families use it when there's different owners of different equipment at the end of the year for their reconciliation purposes. And if we look over the last 3 guides, we do a guide every second year. Mm-hmm. In that time span, the cost of equipment has gone up by about 50%. When we look at the rental cost, which roughly approximates the cost to operate that equipment for a producer, much the same again, 40 to 50%. And that's something that when you see it and you can actually see those numbers, it is a little bit sobering, because I think a lot of producers have felt that inflation, but to actually put a number to it really comes into play. And parts is no difference too. I use an example on our own farm. In fall of 2020, we were pricing out tracks for our 2-track tractor, and they were $10,000, $500 per track. In spring of 25, pricing out that same track, it was exactly double. $21,000. Wow. And again, that's that sobering amount too. And that's not only limited to equipment. We look at farmland. Farm Credit Canada and their farmland value report through Manitoba has shown in that same period roughly a 50% increase in that appreciation that we've seen in that time span. When we look at our costs of production document that the province does every year, we look over that 5-year time span from 2020 to 2025, depending on the crop, but we're in that 40 to 50% inflation amount. It's that much more to put in a crop than what it was 5 years ago. And that obviously far exceeds Bank of Canada's rates or Consumer Price Index rates, but that's something that unfortunately producers have to contend with, is just this high cost. And we're looking at very flat commodity prices, and that cost price squeeze is on again. And tight margins is nothing new to producers, but when we look 2, 3, 4 years ago, when there's really good profitability, there needs to be that pivot or switch to managing in a tighter margin scenario with these high costs.
So Darren, the crop profitability that you see for 2026 compared to 2025, what does that look like? Because you mentioned things are rather flat right now. Do you see any promise for 2026 when it comes to certain commodities?
I do see some promise, but we're going to have to work for that a little bit more.
Okay.
So when we look at crops, and let's take the big 3 crops grown in Manitoba from an acreage perspective: hard red spring wheat, canola, and soybeans. Hard red spring wheat, unfortunately, is not the best story. We're looking at a little bit higher costs, largely due to fertilizer cost increases and a little bit softer pricing. So hard red spring wheat looks to be more like that traditional rotation crop and hard to generate a profit out of. Our break-even yield in our document is over 75 bushels an acre. So, when producers see that and their, eyes get open, but that's what it is. And producers, tell me that that's the same struggle that they have. Canola is a little bit brighter prospect, largely because the price compared to a year ago in our documents is a little bit better. But soybeans is even that much better. A large part of that is it doesn't use near the amount of fertilizer that canola and wheat does. So it's not subject to that same fertilizer cost increase. Also, the yield in Manitoba has been slowly trending up. So we've seen yield go from 40 bushels to 42 bushels in our guide. So that all helps that gross revenue, and it's going to be that yield that's going to pull us into profitability. I still am optimistic that we can turn profits this year, but I think we're going to have to work a little bit harder for it. We're going to have to see some benefits in cost management, and we're also going to have to pick when we choose our pricing. Seems like the pricing is fewer opportunities throughout the year, but when the price rally happens, it happens for a brief amount of time. Producers that know their cost of production can quickly identify profitable opportunities and make a quick decision and grab that profit before it's off the table and the markets go back down again.
Right. And when it comes to inputs, you have the main input for producers is generally fertilizer. And to use an analogy, it's almost like gas prices. They always seem to go up. They never seem to really come down in any measurable form. What kind of strategy can farmers use to adapt to kind of ensure their costs of productions are more manageable?
We hear the 4 R's of fertilizer all the time, and that's often through an environmental lens. But we could also use it through a profitability lens as well. Things like the source, so our nitrogen source. Right now there's about a 15% spread between urea and anhydrous. So producers that have the ability to switch between those sources definitely have a competitive advantage because they can use essentially those properties of fertilizer arbitrage into a lower cost, yet maintain that yield, which is going to be so important for 2026, and maybe save that 15%. Timing is crucial. If we can apply in spring, generally speaking, we have less loss with fertilizer because there's less environmental loss. It's not in the ground as long. The plant can access it and tie it up, so we just don't have that environmental loss. We can save maybe 15% by just improving our timing. So we can squeeze that sponge and maybe get 10-15% here, 10-15% there. That might be the difference between making money and not making money on a year like this.
Right. You mentioned soil testing as well was critical so that you're putting the right amount of fertilizer down to get the expected return in order to be profitable as well.
Yes, something simple as take nitrogen for example, are you in a low soil reserve, high soil reserve, or in the middle? And really without soil testing, we really don't know. I use the example of using a blend, and if we over fertilize, we can spend 15, 20, 30, 40% more on our fertilizer than what we need to do, and maybe lodge the crop, or if whatever the case may be, and not get that returns. But on the other side, if we have a low end situation, we can under fertilize, and if we under fertilize, we don't get those target yields, and all of a sudden we're leaving bushels per acre on the table, and that bites into that gross revenue. And again, I firmly believe that we need to protect that yield, and that's what's going to pull us through this. But we can't protect it blindly. We have to make wise, informed decisions using data, using science to make sure that we are making those best decisions.
Is there anything you wanted to say to wrap up, or any key takeaways from your talk today?
Everybody should do their own cost of production, do their own numbers. Our department produces a guide every year, the crop cost of production. It can be used as a starting point for a lot of producers, but do your own numbers. It takes away a lot of the stress. It might be stressful when you're doing it and you maybe see some negatives, but it does provide a level of confidence so that when we make decisions, we're making informed decisions in timely manner, and that's what's going to bring us profit in the upcoming year.
Right, knowing your numbers to form a plan, basically.
Yes, exactly.
Perfect. Thanks for your time, Darren. Pleasure meeting you.
Anytime, thank you.
Hey.